Greece is living with sweeping capital controls after the Greek banking system was shut down following the decision by the European Central Bank to limit the amount of emergency liquidity going to the banks. What next for the banks? Discussing this with me today is Nicolas Véron, Senior Fellow at Bruegel and Visiting Fellow at the Peterson Institute of International Economics. Welcome, Nicolas. So, the ECB is really in the firing line at the moment for its decision of freezing ELA and now increasing the haircut on the collateral which the banks pledge to the ECB in exchange for this liquidity. Do you think the decisions by the ECB were justified?
I think broadly, yes, but the one you're referring to, which was a decision on June 28 to keep ELA, emergency liquidity assistance, at its current level in spite of the bank run that was starting to happen at the time, was in a way a fateful decision. On the one hand, perfectly justified by the fact that this came just after the announcement, unexpected announcement by Prime Minister Tsipras of the referendum, but also essentially a political decision which cannot be justified just straight out of the monetary policy handbook. I mean, if you read Bayjot, Lombard Street, there is no ELA limit. There is lending at punitive rates against good collateral to solvent banks, and all these conditions make sense from a monetary policy perspective. If you think that the ECB's mandate, as the treaty has it, is to promote the smooth functioning of the payment systems, it's not clear that the ELA limit is part of that.
But now, a German economist would say that the Greek banks are not solvent and that there is no good collateral. So the budget rules suggest that the ECB should not extend any ELA.
Well, if you share that assessment, which the ECB doesn't, then you don't need the ELA limit. You just say this bank is not solvent, I don't lend to it. So the limit is not the tool to address this. And again, the assessment you mentioned, I'm not sure all German economists share it, but some do. So ELA certainly doesn't. And I think, frankly, it's not ridiculous for the ECB to say, or to have said until freezing ELAs, that Greek banks were still solvent. Again, I'm not criticizing the ECB decision. I'm just making the point that this decision was, can call it a political decision. It's a decision made through the discretion of the Governing Council and through individual votes within the Governing Council rather than the mechanical application of a policy framework.
Now, let's look at what's happening in the next few days. Obviously, this crisis coming to a head. On Sunday, there will be a big decision by everyone whether Greece essentially stays in the Eurozone or leaves. Now, what happens to the Greek banks if there is a deal?
If there is a deal, and there are many different forms that this can take, so there are different sub-scenarios of a deal, I think basically that means that the solvency assessment of the banks doesn't have to change. It might be that there are other events, for example, a big default of another borrower, say a big company stops repaying a loan. So you could have idiosyncratic events that precipitate insolvency of one or several Greek banks, but the sovereign part of it doesn't, because the assumption would be that the sovereign piece of the solvency assessment by the ECB is not changed from what it was before the referendum. So ELA can continue, and ELA can even be expanded. The limit can be raised to address the need for cash in the Greek banking system and satisfy depositors who want to take deposits away. But the effect would probably be actually some deposits returning to the system through the restoration of trust.
Then so some sort of virtuous cycle. Now,
very possible if there is a deal.
Let's have a look at the other scenario. What if there is no deal? What happens then?
Well, then things become really painful and difficult. I think one reason why there was this theatralization of a summit of all EU, not just Eurozone member state, heads of member state and governments on Sunday, is precisely that if there is a failure of the process, basically no deal, no prospect for a deal, this would be put in a very sullen manner, which basically makes a decision of the political leaders and not a decision of the ECB. So the ECB would just be an executioner of this decision, would have to recognize that it can no longer maintain its solvency assessment of the Greek banks. And my assumption is that the next day the ECB would say, well, we can no longer consider the bank solvent in the absence of any prospect for a deal, and therefore they trigger a resolution process for all four big Greek banks, which is then managed by the central bank, the Bank of Greece.
Well, Nicolas Véron, thank you very much for being with us today. So we've seen many twists and turns in the Greek crisis, but it really does look like Sunday is the decision point.